Elon Musk. So we've got the Super Bowl coming up, and Elon Musk apparently, according to the Wall Street Journal, has asked Twitter staff to basically do whatever they can to sell advertising for the Super Bowl. In the past, the Super Bowl has been a really big weekend, that Friday, Saturday, Sunday, for the advertisers on Twitter. And so apparently in an email, the company is offering basically $250,000 in free ad space to advertisers that spend at least $250,000 on the platform. So it's sort of like a buy one, get one. And it's interesting because obviously, we know after Elon took over, there were a lot of brands that were very uncertain about the future of Twitter, and there's been a lot of a pullback from advertising on Twitter because of that. Some of that might have been because of macros, some of that may have been because of the uncertainty involved in potentially advertising on Musk's platform that at the time everyone in the mainstream media was suggesting was going to implode. Of course, since then, Elon Musk has laid off somewhere around over 60% of the company. 2,500 approximately individuals left at the company, down from about 7,500. So that's actually closer to 67% of people gone over at Twitter. Now, Elon has recently apparently sent out an email. This was according to The Informer. They released a report saying Elon sent an email out, kind of giving you a little bit of insight into his business practices, asking all employees to list what they had accomplished in January and what other additional issues that they're working on trying to solve or recommendations they have for the company going forward. I think it's kind of interesting. It's kind of like so what did you get done in the last month that you were paid? Kind of an interesting argument. If you're working at Twitter and you're watching this, you probably want to start documenting all the good stuff you're doing. Anyway, going back to the Wall Street Journal over here. Wall Street Journal is suggesting here that they're ramping up their Super Bowl pitches to advertisers, offering a last-minute deal on one of the most high-profile big game ad packages. According to an email viewed by the Wall Street Journal, it's also telling advertisers that the number of conversations on the platform about the Super Bowl and the National Football League is up significantly from a year earlier. Now, personally, I always somewhat question when I hear stuff like that because I'm like, by what measures? But hey, you know what? Whatever they got to do to encourage people to come back and support Twitter, probably not a bad thing, especially since at one point there were suggestions that up to 70% of advertisers had left Twitter, and by another measure, up to 90% of a reduction was noticed in ad traffic, or not, I shouldn't say ad traffic, regular traffic to the advertising domain that Twitter uses, implying that potentially 90% fewer ads were actually being signed up for in November and December. Who knows? But Elon Musk has also given us a little bit more insight, which actually comes as kind of supportive, especially to Tesla stock, since basically Elon Musk used Tesla stock as his piggy bank to finance the purchase of Twitter. But you do have some good news today for Twitter, or for Tesla, and it's actually twofold. It's obviously the win by Elon Musk and Tesla in the 420 funding secured lawsuit, where now they have removed potentially up to $6 to $12 billion of liability. That would have been a big issue if Elon or Tesla had to contribute to this. Obviously, the expectation was that would have gotten negotiated down, but that overhang is now gone. But the Twitter overhang of Elon Musk having to sell Tesla shares to be able to support this company he was saying was trending towards bankruptcy may now starting to be getting removed. And that's because Elon Musk here says in a reply to the Wall Street Journal, and this is the Wall Street Journal trial a piece here where the Wall Street Journal tweeted out the win. Elon Musk replies, "The last 3 months were extremely tough as he had to save Twitter from bankruptcy while also fulfilling his essential roles at Tesla and SpaceX. He wouldn't wish that pain on anyone," he says. He goes on to say that Twitter still has challenges, but it's now trending to break even if we keep at it. Public support is much appreciated. So in other words, not yet saved, not yet clearly in the black, but things are trending towards a better direction than they previously were. He further clarified this by saying, "Thank you for supporting Twitter." And we've got a response here. Somebody asks, was this worse than 2008 or production hell? 2008 was the beginning of the essentially the launch of manufacturing for Teslas via the Roadster, while at the same time being stuck in in essentially the recession. So funding becomes extremely challenging. 2018 represented the production hell of ramping the Model 3, while at the same time Elon Musk was dealing with SEC inquiries over his funding secured tweets. So some responses here from Elon giving a little bit more clarity. But so far, this sounds very good. And keep in mind, Elon Musk did sell about $24 billion of Tesla stock in 2022. That $24 billion of sales pressure offset, that's sales pressure, right? We already know this. Hopefully this is redundant to you, but for those of you who don't know this, I want to reiterate. Elon's $24 billion in 2022 sales offset $15 billion of retail hodl buying. So net retail buying was $15 billion. His sales were $24 billion. So no duh, the stock moved into a downtrend, which was then easily shortable. Now, of course, some people are like, but Kevin, the volume's higher. That's not how hodler, someone who was a hodler, now selling, works. Okay? It has nothing to do with the volume. The volume is sort of like the waves at the top of the ocean. A hodler coming out and selling is like draining the stock from the bottom. It's very different from just day volume. But anyway, a little bit more insight here. We have Twitter talking about potentially charging up to $1,000 a month for verification for businesses. This is because now Elon Musk is allowing companies to get this sort of gold checkmark like the Wall Street Journal has right here. This gold checkmark is very different from sort of the regular blue checkmark, which you could either buy or you get because you're maybe notable or not. So it used to be that if you, there we go. Verified account. This is a legacy verified account. It may or may not be notable, is sort of the checkmark, the old school checkmark. Of course, you can now pay for a checkmark, which just says you have a checkmark if you're, you know, a Twitter Blue subscriber. But the other thing that's interesting is now, let me see if Martin has it. I believe he does. Let's see here. Nope, can't seem to get him very quickly here. But anyway, basically what they've done on Twitter now is they've allowed companies to create this orange checkmark for businesses. And then you could get a sort of a little like T if you work for Tesla next to it. And so you kind of get double verified. So you could get a verification and you could get a business badge as well. And the neat thing about the business badge is you can click on the business badge and it actually links back to that corporate the corporate Twitter page. So it's kind of a way that individuals can now show, yes, I do actually work for what company I say I work for. So maybe you can actually get a little bit more transparency rather than just somebody's bio being updated saying that they work for a certain company. And the idea there is in part to provide more transparency, which we know Elon's a fan of, at least that's what he tells us. But it's also, in some regards, trying to prevent what people like George Santos are able to pull off, where they can blatantly lie through their teeth about their resume, like going to a university that they never actually enrolled at, or working for Credit Suisse or Citibank, which they never actually worked at, yet somehow still get elected to Congress. So to some degree, actually being able to verify that somebody actually works for the business they say they work for, as well as being potentially a verified individual, are some of the strategies Twitter is working on to not only provide more transparency, but also increase revenue. A business might have the interest in having this additional verification, maybe because as they're advertising, they want to seem more credible, which I would imagine if you spend enough money on advertising, they probably throw in the orange check marks, as well as the individual check marks that you get for people who work at the business. But it's kind of neat. These are pretty neat and innovative things that we haven't actually seen Twitter change that much until Elon came around, and now we have view counts, at least some potential reduction in spam, although there's still plenty of spam. Obviously, the blue checkmark changed, the orange checkmark changed, the employee verification changes. So there are changes happening. Company is somehow operating with 67% less staff, and so far Twitter hasn't gone down. So good job, Elon. Mainstream media must be a little upset about that because they were pretty convinced this was going to implode. But anyway, several brands are thinking about returning to the platform thanks in part to the Super Bowl and cheaper ad rates, as well as the release of a new tool. Look at that, already getting new advertising tools. It's pretty smart. release of a new tool that allows advertisers to create a list of up to 1,000 keywords and avoid having their ads appear above or below tweets containing those words. So in other words, you can now create negative keywords, which is something that Google Advertising's platform has let you do for quite a while, but apparently Twitter's has not. So thanks for catching Twitter up, Elon. This is good. Anyway, beverage company and a financial services firm interviewed by the Wall Street Journal recently began advertising again. Twitter is also offering a 3-day Super Bowl weekend package for $250,000, which apparently is considered a fire sale. Wow, that is very expensive. And then apparently in January, the company offered free ad space on promoted tweet campaigns to get people to come back. Apparently on Super Bowl weekend, which is the, it's actually not the Friday, Saturday, Sunday. I said that wrong. Super Bowl weekend apparently is actually for advertising purposes deemed to be Saturday, Sunday, Monday, which makes sense because you're flanking the Super Bowl on the left and right since that's on Sunday. And so you do sort of the highlight advertising on Monday, and you do the prep advertising on Saturday, and then, of course, big game day advertising on Sunday. But anyway, many advertisers, including Pfizer, United Airlines, and General Motors, have paused spending on Twitter since Elon Musk took over in October. I can't help but wonder, like, how wonderful it just at least seems that Pfizer stopped advertising and on Twitter, and presumably Pfizer still advertises on things like YouTube and other platforms. And when Project Veritas does a video critically or potentially even going as far as exposing Pfizer on certain topics, those videos from Project Veritas get removed from places like YouTube, but they get to stay on places like Twitter. And now Pfizer is not advertising on Twitter. It's an interesting link. It's probably causation without correlation, but you know, wouldn't surprise me if there's at least some link like that still going on, especially since you know, companies are seeing their ad revenue decline. Even Google. In fact, if we jump over that for a moment, Google's YouTube declined now for 2 quarters in a row, which is a little bit shocking that YouTube ads are declining. This was the last, or the second to last report ending September. We saw YouTube was down 1.85% from a year ago. And that same thing was seen in the last earnings report from Google, which I do not have handy at the moment, but we saw the same kind of decline at Google for Google Ads. So it makes you wonder if, here we go, if at all Twitter is experiencing any of the same difficulties that the other advertisers are, probably even more so, then yeah, you know, you're seeing some year-over-year declines. Look at this. Google Ads actually down now 7.8%. So you've seen an acceleration from, first of all, strong growth to then negative growth, and now a lot of negative growth. So things got even worse in the quarter ending in December for advertisers here. Kind of a red flag for advertisers, by the way. American Express told us the same thing. American Express in their earnings call warned that advertising spending was declining at small businesses. Now, what I think is so interesting about you get, here we go. The commercial services and spending by U.S. small and medium-sized enterprise customers represents the majority of commercial services. However, that segment was the slowest growing customer segment, and small business enterprises have recently started to slow down spending in certain categories like digital advertising. And I find it very interesting that they talk about this sort of recent change of a slowdown in digital advertising, somewhat implying that Q4 was really a little bit of a larger headwind for a lot of advertising companies. Probably, frankly, why you had Elon in November and December essentially complaining, hey, you know, we are trending towards BK over here. Fortunately, though, it seems like things are getting better. So over here it says Twitter has been telling some brands that advertisers are returning to the platform. For those that paused post-acquisition, we have seen 30% plus return. That's great. More than 70 of Twitter's top 100 ad spenders before Musk took over were apparently not advertising on the platform, according to Sensor Tower as of January 29th. So that's still potentially 70% of the big boys not being there, comparing to the 90% potential reduction in advertising in the fourth quarter, at least at one point. Anyway, they give some examples here of 30 seconds of ad time can cost somewhere around $7 million for an actual Super Bowl TV ad, and are making this comparison to companies using Twitter. But look, the good news is clear that even through the advertising challenges that the entire advertising space is seeing, whether it's TV or potentially connected TV, we'll see what happens when we get Trade Desk numbers, advertising challenges at Netflix and low take rates on those ads. At the same time, as all of this sort of pain is happening in the ad space, it actually looks like you've got Elon Musk getting the company to at least trend towards profitability. Probably not yet profitable, but trend towards profitability. And remember, he suggested, and some like to try to say that this is his promise, but he says that he does not need to sell any Tesla stock in 2023. Now, that is what he says. What he does could be different. My suspicion is if he would have lost the lawsuit, he would have been right back to, unfortunately, having sold. So, fortunately, that lawsuit overhang is gone. And he says he might not even have to sell any stock in 2024. Maybe he doesn't have to sell until 2025, though that is less of a guarantee as more time goes on. So we'll see. But paying attention to Twitter as a Tesla investor is a surprisingly important endeavor. So something to pay attention to.